All right, I am genuinely tired of telling you guys that you only need highs, lows, and fair value gaps to make a living. So the last two trades that I sent out in my private Discord server as signals were both a winner, and they both used this technique and this strategy that I'm about to teach you. So this was NZDUSD. It was a beautiful trade, and then afterwards it was CAD CHF, and it worked out perfectly. So I'm going to teach you the entire strategy, and this is exactly how I made around $9,000. But in the title, I'm just going to say 10,000 because, it makes sense. So literally, this is all you need, guys. Highs, lows, and fair value gaps. You do not need, quarterly theory, Wagyu beef, McDonald's cheeseburger theory, or whatever. All right. All you need to know is that whenever price takes out any high or low, which is basically external range liquidity. So any high or low is external range liquidity, right? Now, in this strategy, I'm going to teach you an A, B, C, D continuation pattern. And that's exactly what I use for this strategy, all right? It is not a simple ERL to IRL strategy. There's something more to it. I'm going to teach you in this video. I have taught this before on the channel, but I'm going to do this in detail in this video. So ERL is basically high and low, and any fair value gap that is primarily below the 50% is called IRL, internal range liquidity. But if there is no fair value gap below the 50% and there's a fair value gap above the 50%, then that is going to be your drawn liquidity. So once price takes out ERL, its next destination is always going to be IRL. Now, not all the time it's going to come back. It's going to keep pushing up sometime, but there's a reason why we look for confirmation, right? So before I move to the strategy, I want to talk about time frame alignment. This is very important, right? So make sure you keep this in mind. So we always go from daily time frame to 1 hour to 5 minutes to take our entry, right? And we always go from 4 hour time frame to 15 minute to 1 minute to take our entry. And for swing traders, we go from weekly to 4 hour to 15 minute. And for, swing traders, we go from monthly to daily to 1 hour. So make sure you keep these in your mind when you're looking to do, top-down analysis. That's what you should be doing. All right. So let's take the daily time frame and 1 hour and 5 minute time frame as an example for this video. So let's assume that on the daily time frame, we took out external range liquidity and we have internal range liquidity over here, all right, on the daily time frame. Now, once that happens, we have to look for confirmation that tells us that now price is going to go towards this fair value gap. So now we're going to simply drop down to 1 hour time frame, all right, and then we have to look for a market structure shift. Now, once we get the market structure shift, now a lot of people, what they would do is they would mark out a fair value gap here, and then they would look for a 5 minute confirmation here. That's not what we want to do, all right? That is a little low probability trade. What we want to do is we want to look for an A, B, C, D continuation pattern, right? So we want to wait for another lower low created. So over here we have a lower low, lower high, and then a lower low. In other words, as I taught in my previous videos, I call this the A, B, C, and then D pattern. This type of liquidity sweep is insanely powerful, guys. This is literally all you need, guys. All right. So ERL taken out on the daily, then we got a market structure shift on the 1 hour time frame that confirms our bias. And afterwards, we are looking for another lower low to print, right? We are simply looking for any ABCD pattern to occur before the IRL on the daily is hit. So we got a sweep here on the 1 hour time frame. Then we're going to drop down to 5 minute time frame. And then we're going to look for another market structure shift, take our entry, and we're going to target this low over here. All right. This is going to be our safest target, even though our draw on liquidity is here, but we want to target the safest level. And that's how you actually make money. You can't just trust the price to go to this FVG every single time, right? But this is literally the best trading model that you will find ever on YouTube. All right. So then we can look for, another, a break off this low, and then we can look for another ABCD pattern. So it's going to look something like this, right? If we take out this high over here, and then we can look for a 5-minute market structure shift. If we don't get a market structure shift after taking out this high, then we can look for this high to be taken out, because in other words, it is also this type of high. We have a lower low, lower high, lower low, lower high, lower low. So we want to see price take out this high over here. We do not want to look for liquidity sweeps that look like this. We do not want to look for ABC liquidity sweeps, all right? We want to look for ABCD. This is not valid. We do not want to look for this. We want to look for this type of liquidity sweep, all right? So we have a lower low, lower high. We want to see lower highs taken out. Now, once a lower high is taken out, we simply drop down to a 5-minute time frame, right? And we take our entry and we target the most recent low that is printed on the 1-hour time frame. Very simple. And there are a few more rules that you must keep in mind. So the market structure shift, or primarily your entry must be during Killzone hours. So that's going to be London Killzone and the New York Killzone. If you are using the 4-hour, 15-minute, and 1-minute time frame combination, you primarily also want to look for a market structure shift during Killzone hours. And that's only specific to the 4-hour, 15-minute, and 1-minute time frame combination. All right. But for daily, you can get liquidity sweep at any time. You can get a market structure shift at any time, but your entry, however, on the 5-minute time frame must be during Killzone hours. Very simple, guys. All right. So this is the entire strategy, right? This is literally all you need, guys. Let me give you guys some examples, and then it's gonna make everything crystal clear. So primarily, if you flip the chart over, it would look the same over here, right? So we have a market structure shift. Then we have a higher high, higher low, and then a higher high formation. Price takes out this low on the 1-hour time frame, and then we drop down to 5-minute time frame. We look for another market structure shift, and we take our entry. Very simple, and we target this high over here. So now let me give you guys some examples. All right, so here is example 1, and this is the trade that was sent out in the Discord as a signal. If you want to join, there's a link down in the description. You get access to my private course, and also to the private Discord server where I share signals. So over here, you can see that we took out high, and we also took out this high, right? So we took out external range liquidity on the daily time frame. Now over here, what we have is a internal range liquidity, which is a fair value gap. So if I go to the lower time frame, so from daily, we go to 1 hour to look for a market structure shift, right? Now, we got a market structure shift here, but we didn't have another lower low printed, right? So you can see we had a straight up displacement, and a lot of people would take their entry from this auto block. However, it did play out to some extent, but it was not a valid trade. Now, after we took out another high, another daily high, another daily ERL, right? So if I go to the daily time from here, then we took out this high over here. And if I go to the 1-hour time frame, you can see once again that we got another market structure shift over here. But we didn't have another lower low printed. So I primarily want to see a lower low, lower high, and then a lower low, right? And it just never happened here. And a lot of people would take their entry from, this fair value gap and look for 5-minute confirmations, and it clearly just didn't work out. But then finally, we pushed up another time once again, and we had a market structure shift. Now, afterwards, we had another lower low printed. So we have a lower low, we have a lower high, and then we have a lower low. Now, we can start looking for the ABCD pattern. And over here, you can see we have A, we have B, and then we have C, right? And right here, what do we have? A, B, C, right? Sorry. A, B, C, and then we have D over here. So you can see that after this, let me just mark it out like that. This low was broken. We have lower low, lower high, and then a lower low. And then that's when we look for liquidity sweep over here, right? We are looking for this type of liquidity sweep, guys. Remember this. We're not looking for this type of liquidity sweep. All right, we are not looking for this. We're looking for this. So I hope it clears it. And I'm gonna mark out this. So let's just go here, right? I'm gonna mark out this. So once this high is taken out on the 1 hour, I'm dropping down to 5-minute time frame. And you can see that we clearly got a market structure shift. And you can see that the market structure shift was also during Killzone hours. So if you get market structure shift during Killzone hours, that's even better. All right. Now it's gonna like, you know, give you a high probability that the trade is gonna work out. So we have this as our target. And since the fair value gap was big, I just took my entry from the 50% of this fair value gap. So I'm just gonna mark out this here. And I set my take profit level somewhere around here, and it was a 1 to 2 trade, so my stop went somewhere around here. And let's see how this plays out. And look at this beautiful delivery, guys. Very easy, very, very systematic. Let me give you guys a couple of more examples. All right, so here is example 2, looking at USDCAD on the 4-hour time frame. And for this, we're gonna go from 4-hour to 15-minute and to 1-minute time frame to take our trade. So over here, we took out this high, and if I use my Fibonacci from the dealing range, so essentially a dealing range is the starting point should be the point where the liquidity sweep was done. So over here, you can see we took out this low, so that's going to be our dealing range low to dealing range high. Why? Because we are now retracing after taking out the high. So dealing range low, dealing range high, and you can see we have a fair value gap here as well. Now we don't have any fair value gap below, so we're going to use the most recent above the 50. So in this case, it's over here. So that's going to be my draw on liquidity. So I'm going to drop down to 15-minute time frame to look for a market structure shift. So we took out the high over here, and now I'm looking for a shift, and that happens somewhere around here. So just a fractal market structure shift. We don't need anything else. And now you can see when price was coming below, it created this liquidity, and that's exactly what we want to see. So we have a lower low, lower high, lower low, lower high, lower low. All right. That is primarily what you want to see. So once the market structure shift happened, we had a few POIs, right? So this high over here was from where we want to look for a continuation purge, or A, B, C, D, right? So now this high is taken. I'm going to drop down to, 1-minute time frame. All right. So I'm just going to go to the 1-minute time frame here. You can see that the high was taken out. So now we're looking for a shift in the market structure. And this happens just around here. We need a fractal market structure shift, nothing fancy, all right? And we clearly have this fair value gap that was filled and well in the Killzone hour, so 1052, right? So now, just because we were approaching the end of the day, right? I primarily want to be out before 12, especially when I am taking my trades on the 1-minute time frame, all right? So I would go for 1 to 2. Or at least 1 to, at max 1 to 3, or target these equal lows over here. Now this is of course hindsight, but that's exactly what I would do because we were approaching the, and I would not target this level here because that's very risky. We are out of the Killzone hours. The spreads are going to be massive, especially when we're on the 1-minute time frame. So it's best to take your profits before 12 or at max around 12, 15, and 30. So you can see how well it plays out, guys. Just go for 1 to 2, right? Just stick to mechanism, mechanical. Just be as mechanical as possible, what I'm trying to say, all right? So let me give you guys a couple of more examples. All right, guys, so here is another example. And as you can see, we took out ERL on the EURGBP daily time frame. And over here, we have a fair value gap that is going to be our target. So now, if I go to the 1-hour time frame, you can clearly see that after taking out the ERL on the daily, we had a shift in the market structure. And while we were going up, we created the higher high, higher low, and then a higher high, right? So we also have a higher high, higher low, and then a higher high. So that is also a valid level. But if you don't get a market structure shift and price keeps going down, then it is best to avoid this point of interest, right? We look to consider another low, so this low. But let's see what happened over here. So if I go to the 5-minute time frame, you can see that once we took out the first low that was here, we didn't get a market structure shift, right? You can see price clearly dropping until we took out this low over here, right? So the second low that I marked out, that was taken out. And then you can see that we have a shift in the market structure over here. As I said before, fractal, MMS, MSS, right? You don't need big market structure shifts because usually they're basically just liquidity sweeps. So look to take your entry as soon as possible, right? So over here, you can see the market structure shift. We have an auto block, continuous bearish candles that swept liquidity. That is your auto block. And you can see the entry was during Killzone hours, 7:15 New York session. Love to see that. You can see we have a closest target over here. And I primarily just go for 1 to 2 regardless of my setups, regardless of my draw on liquidity, right? It's just best for my psychology, and you can see it gives me 1 to 2. Very simple, very close to mechanical strategy, but literally this is all you need, guys. Now I can show you thousands of examples. It occurs on every single time frame. Let me give you guys one more example. All right, so this is the last example looking at GBP CHF on the weekly time frame, and you can see we took out ERL. This is the high, right? Also took out this high over here, and we have this fair value gap. So that is our bias. That is our draw. But we always go for 1 to 2, so remember that. So now I'm gonna drop down to 4-hour time frame here, and you can see after we took out ERL on the weekly, we had a market structure shift on the 4-hour time frame, and then we also printed the lower low, lower high, and then a lower low pattern. So we're gonna look for a sweep of this high over here, and right after that happened, you would drop down to 15-minute time frame, and you would look for a market structure shift. So you can clearly see price went up, and then it created a fractal low over here. So price broke that fractal low, and afterwards, what do we have? We have a fair value gap formation. What is our entry time? 7:45. Excellent. So short position here, stop right above the high, and 1 to 2. Perfect. And look at how beautifully it played out. This is literally, guys, like, I wish I could put this in your mind that you don't need anything else other than what I'm teaching you right here. Of course, now I go into much more detail in my private course, but for now, this is literally all you need. All right, and I'm not telling you to buy my course or anything. This should be enough, but unless you wanna see me trade this strategy and other ones that I don't talk about here. So yeah. Anyways, thank you so much for watching. I'll see you guys next time.